Hey everyone, this is Lucas Bagno, an investor at Village Global, and I'm here with my co-host Ian Cinnamon. Welcome to Solarpunk.
In this podcast, we cover topics related to space and defense and discuss how technology can contribute to a better and safer world.
Hello everyone, welcome to another episode of Village Global Solarpunk. We're super excited to have today on the show with us, Geoff Lewis. Geoff is the founder and managing partner of Bedrock, a technology investment firm launched in 2018, currently managing approximately $1 billion. He serves or has served on the board of directors for companies including Lyft, Nubank, Vercel, and Workrise. He has additionally led early investments in companies like Wish, Canva, Rippling, Clearbank, Flux Safety, Tilray, and several others, now valued at north of $1 billion across sectors and geographies. The New York Times has named Geoff as one of the top 100 venture capitalists in the world. Bedrock is credited with coining the phrase narrative violations to describe the most compelling technology investment opportunities. Prior to founding Bedrock, Geoff served as a partner at Founders Fund for several years and began his career as a technology entrepreneur back in 2009. Now, on to the show.
Hello, great to be here. Thanks for having me, Lucas.
Awesome. Well, so Geoff, we thought that we would start off talking a little bit about the markets, given everything that has been happening over the last couple of weeks. You shared a few thoughts on your tweets and on temp checks. So we thought that we would ask you, today's markets are super tumultuous. What are you telling your founders in specifically, companies like Epirus or Anduril and others that you're working with? What is the advice you're giving them?
Well, the advice was really delivered in sort of Q3 of 2021 or Q4 of 2021. So we're not really delivering much advice now. Our advice back then in the back half of 2021 was that the markets were going to crash. And so we were, sort of June, July, August, September, October, November, December of 2021, ringing the alarm with companies and encouraging our entrepreneurs to the extent, they had a need for more capital over the next, 3, 4, 5 years, encouraging all of our entrepreneurs to raise, as much capital as they could, as quickly as they could. And quite honestly, we traded off several internal initiatives, things that we wanted to do for our firm Bedrock in sort of Q3 and Q4, to focus really almost all of our energy on working with, a handful of our entrepreneurs where we are extremely bullish long-term. So companies like Flux Safety, which is a public safety operating system. It's, they have a series of hardware products they monetize through SaaS subscription. Companies like Epirus and others really encouraging them, hey, go out to the markets, raise more capital. We'd love to invest more capital in the business as well because we're very bullish over the long term. And that was sort of the advice. I'd say at this point in time, we actually feel quite good about the set of entrepreneurs and companies we work with. They, the bulk of them have many, many, many years of runway because a lot of them execute on fundraises, not only in Q3, Q4, but also in Q1 of this year. So we feel actually very good. Those that, have a runway issue, we're giving the standard advice. I mean, we don't have any sort of radically unique insight. It's basically a situation where the bid-ask spread in the private markets is going to remain entrepreneurs want a valuation that is going to be higher than venture capital investors are going to be willing to pay for some time. And so there's just going to be this, multi-month or multi-quarter period where these prices are going to have to get sorted out. I'd say the appetite, the upside for companies like Epirus, like Anduril, like Flux Safety, like R0, which is another sort of hardware company focused on UV disinfection and decontamination, where we're investors and really bullish there as well. But the upshot for these companies sort of building against these really big long time horizon problems where they're sort of more capital intensive is, I do think that more often than not, they're sort of less correlated to the public markets. And so I'd say one area that's quite good to be in right now as an entrepreneur is doing anything where there's not a direct public market comp. And so if you think about Anduril, about Epirus, you can sort of comp them to the primes in the public markets. Those are doing quite well, but they're not really like the primes. They're very different. They have lots of proprietary technology. You think about Flux Safety, there's not really a comp for what they're doing. Technology that solves crime, there's just not a comp for it. And so we think if you're an entrepreneur starting something new today, you should think about what areas don't have public market comps. That's kind of a good area where I think there is going to be appetite from investors to deploy capital into those types of businesses.
I think that's one, amazing that you guys were able to give that advice early on the potentially tumultuous markets, and sounds great that a lot of these companies have been able to kind of shore up their coffers and be prepared. What did you see in the markets that gave you the sense of, hey, we need to sound the alarm bells? And why do you think so many other people missed that? What was the unique insight that you had?
The unique insight I'd say was there's always a macro and micro story. So the macro story I don't think was particularly unique. You can't print that much money in such a short period of time without ultimately having to sort of radically re-engineer the economy and raise interest rates at some point, which obviously hits tax. That was sort of the macro insight. I had this line, nihilistic valuations, that I was sort of using since 2020. So it's sort of been sounding the alarm for some time. It was a few years early, and we internally got some things right through COVID, got some things wrong. I mean, our intuition was we should do very little. We generally followed that, but we probably didn't even invest a little more than we should have retrospectively through those 2 years. That said, the micro insight was really just looking at, we look at lots of companies. I think we're much more focused than many firms. We're only looking at a few companies at any given time, but we still are looking at 150, 200 plus companies a year that we're sort of meeting with the entrepreneurs and talking with them. And basically everything was getting funded. And everything was getting funded at valuations that we couldn't underwrite. And I felt like people were just on this autopilot capital deployment cycle on the VCs, under sort of this autopilot momentum-driven thing where people weren't actually thinking about the specific businesses, the specific entrepreneurs. No one was thinking about the specifics, and everyone sort of just focused on the general momentum in the market. And that was sort of it felt like it was just getting extremely crazy by the summer of last year.
And Geoff, I love this idea of financial nihilism that I think you and I have talked about, and I give you total credit for.
Well, really... it's not that good. It's not a healthy idea, so I don't think you should love it.
But I love how it just captures the essence of so much of the underlying psychology that we were experiencing back then. You talked a couple of weeks ago how we had a bull market on get rich quick financial schemes and a bear market on generational assets. And I'll be curious if you could comment on what you think was driving this underlying psychology happening with this idea of financial nihilism and, just throwing money at things, just pretend like without doing the work and everything that was happening. Like, what do you think was driving that? And how do you think that we got there?
Well, I think that there was this sort of one-time psychosocial shock societally when the pandemic hit, where people suddenly felt, far more mortal than they'd ever felt before. And, while it turned out that actually the pandemic is not very deadly unless you're in very specific demographics, I think there was this sort of radical change psychosocially where people sort of reckoned with the fact they could die. The cities started sort of, most of the major cities really decayed in those early stages of COVID as everything got shut down and folks that had the resources left these cities for, periods of time. And I think it sort of just changed people's, there's a sense in which we sort of, society creates a matrix for us. You sort of live in this matrix. And then when that's sort of radically pulled away in a short period of time, you can sort of see that actually there is no room full of smart guys, girls, trans people in skinny ties, whatever they're wearing in a room that knows all the answers. Everyone's kind of just, figuring it out for themselves. There is no grand system that keeps everything, working. That there's a sense in which it makes people feel a lot more mortal. And I think that manifested itself in a wide range of ways. And one of those ways was this sort of, orientation towards just what are the ways that I can make a lot of money quickly and have a lot of fun. And so, there's sort of like this sense in which a lot of the energy in Web3, which I quite honestly, I am long-term quite bullish on the decentralized world, and, been invested. We at Bedrock have been invested in things like Bitcoin and Ethereum for many, many years at this point, and are bullish over the long term and other Web3 projects. But there's a sense in which so many of these had a get-rich-quick scheme, and it continued to feel to them. And when you sort of unpack the white papers and actually dig in, there's no there. And, there's sort of two memories really stand out for me on this sort of. So I would say the financial nihilism was across everything. It was in the public markets. It was in the private markets. It was probably most pronounced in sort of crypto, Web3 through 2020, 2021. And, the sort of two memories would be, one, I remember meeting with a sort of leading entrepreneur in that sector, sort of one of the most successful folks in crypto. And they were telling me about how, they have to have 2 IV drips a day. So they're getting vitamin IV drips twice a day in order to be able to attend all of the different conferences and parties that they have to go to constantly. So there's sort of this like IV drip. The only way it's sustainable to sort of keep making money in crypto is if you're getting, a nurse comes to you twice a day and gives you a vitamin IV drip. That felt deeply off. That didn't feel like a sustainable way to sort of make money long term. And then two, almost every pitch deck or every white paper that I, starting in 2017, we started reading white papers for ICOs. Then the ICO thing disappeared. Then there's all these pitch decks for these, pre-tokenization projects. They all had spelling errors in them. And so I'd say like 90% of these things had spelling errors. And we tend to be very focused on specifics and on details. And I think there was this modality where everyone was just focused on the general momentum and not the specific question of whether, is this specific project actually, is there a chance for it to be durable? Is this specific company, is there a path for this to be 10, 15, 20 years from now really durable? Or is this just purely a momentum, psychosocial type dynamic? And I think that was sort of the way in which the sort of shock to the system, way in which people felt suddenly very mortal, saw the matrix pulled away, trickled down into these financial markets.
Amazing overview of kind of looking backwards. So if we bring it to today, though, right, there are all these founders who are still interested in building companies who haven't previously raised. They want to start now. They have an idea. We're still kind of in the Great Resignation. What advice do you have for somebody who's starting a company today in this down market? How should they be thinking about whether or not it's a good time to do that? How to fundraise, whether to fundraise a large round, a small round? Are there still VCs out there? What advice would you give to somebody?
Well, we're certainly still out there and actively investing. And I know there are several other firms that are, but so definitely still VCs out there. There's definitely still a lot of demand to invest in early stage technology. That's not going away. So I do think it's always a good time to start a company. That said, I want to be crystal clear. Something that has really changed is you should only be starting a company. You should only be becoming an entrepreneur if the thing that you are building is your life's work, because it is going to be so hard. We are in such choppy waters geopolitically, in the financial markets, sort of societally. It is going to be so hard over the next 5-10 years to get these things to work that unless it's your life's work, I don't think you should be starting a company. And we exited a phase, and just to quickly revert back to looking backwards, like a decade-long phase where becoming a founder was, sort of like the new being an iBanker or something. So this very sexy, aspirational thing to do. You had a lot of people doing it for social signaling reasons. And I would advise folks today, you should only be starting a company if the company you're starting is your life's work. And we will only be investing. We at Bedrock, we are only investing in entrepreneurs where the businesses are their life's work, full stop. That's all we're doing going forward.
And Geoff, maybe that's a good point to bring in the article that in the investment that you've made a couple of weeks ago on Rippling. And the name of the article was Rippling is Built Different. And you go on to talk about how Parker Conrad is a different type of entrepreneur. And it also reminded me of Palmer Luckey from Andrew that you also invested in, that also made a fantastic comeback as a founder.
Yes.
Can you say a little bit more, like what do you identify in those individuals that you find unique?
Well, it's always specific to the entrepreneur. I'd say Palmer's an amazing example of this as well. We're basically Anduril, it's sort of this combination with Rippling, with Anduril, where you've got an entrepreneur who's basically been forged through, quite honestly, being wronged. So partially been forged through being wronged by the world, by other people. And, so as an investor, you have to form a view, okay, was this person actually wronged? And, in the instance of Palmer, my view would be yes. In the instance of Parker, my view would be yes, this person was wrong. This person sort of scapegoated in these sort of crazy ways. And so they're forged. They become forged through this. And then they also have a life's work mission. And, in Rippling's case, it's truly, I think, can be a solve long-term for so many of the issues we have around HR and companies that I think it can be sort of a Salesforce scale business. What Salesforce is for a company and its customers, Rippling can really be for a company and its employees, sort of this all-in-one incredible solution with HR and IT, just really streamlining and simplifying processes for companies internally, which I think unlocks just a lot of human flourishing, quite honestly, if you can reduce the amount of administrative work in these companies. In Onderil's case, I remember my former colleague, Trey Stevens, initially ideated the company with Palmer. I think starting back in like late 2015, early 2016, they'd initially had the idea and then they launched or founded it, I think, in 2017. But just around, like, obviously there needs to be this sort of massive improvement in the technology that the US and the United States allies have, and they felt uniquely positioned to do that. So it's this combination of like a life's work type view for what the company can become with an entrepreneur who is motivated by that life's work, but also has this extra thing that's motivating them, which is they've been forged because of, in part, from hardship. They've been forged by hardship. Things have not always been easy, and they've had to overcome something just extraordinarily difficult. And I think in the case of both those founders, Palmer, Parker, I like that they sort of have an alliteration to them, Palmer and Parker. But in the case of both of those founders, people were trying to destroy them. Okay, folks were trying to destroy those people, and the stuff that happened to each of them would have destroyed most humans, let alone most companies. Very few founders have that. Very few entrepreneurs have that.
And just double clicking a little bit, the timing of that investment, since we're talking so much about, psychology and markets, the timing of that investment was also super interesting to us because it came out basically on the same week that the markets were panicking. Now, maybe the actual investment were a few weeks before, but
no, it closed like a few days before. It closed like right before we announced it.
Well, that's fantastic. So can you tell us a little bit more about sort of the investor psychology that you and the team was trying to manage when you're making that decision for, a late stage investment, $10 billion plus valuation in the midst of, everything that was happening in the financial markets?
Well, absolutely. I mean, on Rippling, we wrote this piece. I'd encourage folks to go read it, bedrockcap.com/Rippling, which really outlines the deep prehistory we had with this company and the many, many, many cycles we'd spent on the business and on Parker and on the executive team over many years, starting in 2018. And so it's sort of this situation where we'd assessed the company in depth. We'd done diligence in depth 3 separate times over 4 years before leading this round. We've been invested in the company since before their Series B, since 2019. So this is a company and a founder that we'd known for just a very long time. And we'd seen the business just outperform plan month after month after month, expand their surface area in all of these incredible ways, seeing firsthand how Parker, how other execs on the team were growing as leaders over many years, which is why that Rippling round, we're not the only ones who saw that. So the lead investor of their Series A, Kleiner Perkins, co-led this Rippling round with us, this Series D round. Other existing investors such as Sequoia, Y Combinator, doubled, tripled, quadrupled down alongside us. So there were a handful of existings, ourselves and Kleiner being the ones who co-led the round, that saw, okay, this actually can be much bigger than anyone thinks it is. And so one of the ways in which, you know, you can do quite well as an investor is if you believe something everyone knows Rippling's a great company. So you sort of pull, you know, entrepreneurs, you pull investors. Everyone agrees this is a great company. I don't think there's anyone who thinks it's not. The question is, who thinks it's even more great than anyone else does? And I'd say we are in the camp of a handful of investors who think it's even more great than anyone else out there thinks it is. Like, I think people think, yeah, this will be sort of a $40 billion company in 10 years. That's maybe the conventional wisdom. We think it can be like a $200 billion company in 10 to 15 years. Now, the second piece of this, of course, is you have to have a long-term hold on these things. And so we knew the market was going to crash. We wanted to lead around in Rippling. We'd already been invested, but we wanted to concentrate capital in that company. That's part of our strategy at Bedrock, is concentrating capital from our funds and our top few companies round after round and supporting those entrepreneurs as they scale. So we knew we wanted to do it. We knew the market comps were going to look insane. We knew it was singular. And so it's not a repeatable thing. We're not going to be doing that 5 other times. This was an N of 1 investment. It was a once in a lifetime investment. And our piece works through our thinking around why we should do it. And then we have to hold that position for a very long time. We won't be selling that. My hair will probably be gray by the time we think about exiting that one. We're going to be holding that for a very long time.
So, of course, Rippling's an incredible company, software-based. Many of the other companies you've mentioned in our session so far, Epirus, Flock Safety, Anduril, et cetera, they're hardware-based. How do you think about your affinity and Bedrock's affinity for these kind of companies that have real hard assets? They're building something physical. Do you feel like you gravitate towards this sector? This just happens to be part of your investment criteria, and looking for companies where it's somebody's life's mission that often happens to touch hardware and something physical and real?
It's a little bit of a misnomer, to be honest. So when you think about our hardware, there is some credence to your point. So I'm going to address your point in a minute, or your question in a minute, but I do want to note that actually a lot of these companies that look like hardware, so take Flock Safety, it's a software business. Now, hardware is sort of their entry point. They're installing these cameras. They have now a gunshot sound detector so it's a multi-product company now. But ultimately, the value is created by the software, by the computer vision, by the machine learning. People are paying for seats on a software SaaS subscription. I think Anduril would argue that, yeah, they're building hardware, but their value is really in their Lattice operating system, which is a software system. And so I think these companies, where for us to do hardware, we want there to be a software-centric business model. Hardware can obviously be a key component of it, but ultimately, we think the value is actually largely created. The hardware is sort of necessary for the go-to-market. In order for Anduril to work, they have to have lots of amazing hardware. Obviously, in order for Flock to work, they have to have hardware. But ultimately, a lot of the value is created through software, through computations, algorithms, etc. Epirus is somewhat more on the hardware side. R0, which is our biosafety company that we're really excited about, very much on the hardware side. And yeah, I'd say we're not sort of, we don't have any sort of obsession with hardware-enabled businesses, but they are oftentimes somewhat undervalued because it is just incredible. I hate these sort of trite truisms, but one that is just true is hardware is really hard. And so most of the hardware things fail. It's really hard. So you can occasionally find a corner case where it's extremely hard, but not quite impossible. And those ones tend to be undervalued at the early stages.
And, when we think about your portfolio and the areas that you've focused on, in addition to some of them touching hardware, as we just discussed, it feels like a good number of them help keep kind of the West safe. It furthers kind of democracy, Western values, and so on. If you were to take a step back and think about where our country is today, what are you most worried about? What's keeping you up at night? And kind of the second order of that is like, what are the opportunities that you think are there for startups or technology companies to solve?
Man, well, we got a lot of problems. I sort of have an outsider insider view on this because, I'm an immigrant to the United States. I grew up in Canada. And so I sort of have an insider perspective. And I think there's a sort of crisis of meaning writ large. And, there are all of these different causes. I think sort of hollowing out of the middle class has caused, communities to lose cohesion. I think that there's been a loss of religiosity in sort of the traditional religions that folks historically have believed in the US. And so you have people looking in all these new directions for meaning, for purpose, for belonging. One of those is something like Bitcoin. Another of those is something like AGI. Another is something like transhumanism. Another is politics, quite honestly. And I think actually politics has probably replaced religion as the sort of dominant, community belonging forming force now in the United States. And that I think is extremely dangerous. The whole purpose of politics is things should just work and operate and the society should be functioning. And you shouldn't have people constantly obsessing over politics in society. That doesn't feel very healthy to me. And so I feel like I could point like every investor's like, these are huge problems. We need founders and entrepreneurs building companies to solve problem A, B, C, D, E, F, G. And like, I could point to 10 of these, but I think the even bigger problem to solve is this crisis of meaning, of belonging. And you actually can solve that as an entrepreneur through building a business where your life's work is like, can imbue people with purpose, can imbue people with meaning, can imbue the team that works with you with meaning and purpose, and hopefully make society more vibrant. And so I do think entrepreneurship is a means to solve this crisis of meaning that I think is the biggest problem in Western society. Now, I think there's another version of this in Europe where I think it's maybe even worse there. I won't even get into that today, but I think it's bad. I think it's bad across the Western world right now. And I don't see an easy path. There's obviously all the geopolitical stuff. I sort of oscillate on China and whether we're sort of too worried about it or not worried enough political things. I think the crisis of meaning is sort of a root cause issue. And I trace it back to the loss of religiosity, to be honest with you, in the West.
And Geoff, maybe to unpack that a little bit, when we chatted with a few other guests on the show, I think both Catherine Boyle and Mike Maples pointed to this website, WTF happened in 1971, which basically talks about all the expansive monetary policy, Bretton Woods, and all those kind of things that happened. I'd be curious if you could unpack a little bit more in your perspective where this crisis of meaning comes from. You mentioned religion. And what are other aspects that are driving this, and what do you think is our way out of this? I think for entrepreneurs, there's a lot that they can do to both bring meaning to the world, but also self-actualize through building their companies. What can other people be doing to help get us out of this problem?
Well, you need people to be peeling off from the legacy institutions and trying to build new organizations. They don't have to all be companies. So you need people to be doing that to a much greater degree than they have been. And I do think it's starting to happen, but it's sort of going to be this slow, long, arduous process. I increasingly believe that actually the crisis of meaning is so. I don't want to repeat what other guests have said on the root causes. We could talk about that. What the fuck happened in 1971 or 2 piece. I've read it. I know what it says. I generally agree that something happened there. But I have a few quibbles with that one, but generally I think it's right. I think actually things are so screwed up that you might need some sort of insane macro shock to actually solve it. Or not solve it, but give people the motivation to solve it. And I'm very scared about the fact that I feel we might actually be at that point. And so I think it's sort of, well, what can you just do in your life day to day? And I think it's like build community, have a family, have a community, work at a place where you really resonate with the people and the culture, try to have a mission-driven company, sort of these very basic things. Or if you're sort of interested in something in the nonprofit arena, like try and start new things. I'd say like one maybe more actionable piece is typically the larger the organization you're a part of is, the harder it is to find meaning in it. And so, you know, I started my career working at a company that I think had 100,000 employees, Procter & Gamble, back when I was like a college intern and right out of college for like a little while. So it's sort of a weird trajectory into tech and really hard to find meaning in such a big organization. And then I've just successively been part of smaller and smaller and smaller teams and feel like my life has gotten more and more and more meaningful as I sort of am part of smaller teams. And, you know, Bedrock, we have a team of 10 people now, myself included. That feels like a really good sized team to find sort of meaning in the work that you're doing. And so, yeah, it's a hard problem. I worry we might be in for some sort of, you know, I'd say that, you know, on a personal level, being anchored in beliefs and sort of believing in things that are much older than I am, that have been around for centuries, as sort of beliefs about things has helped me to find meaning in the world. I think more people should look to things that aren't on Twitter, but are sort of far more ancient as a place to anchor oneself for meaning.
Geoff, so you mentioned that, you know, in some ways you believe that we need to have a hard pivot from a lot of what's going on today. Some of the perhaps most contrarian ideas that I've seen Bedrock fund is new cities. I think you recently had an investment in Praxis, and I think you've made a few others as well, right?
Yeah.
So one of I think the criticisms that one may have is, hey, we shouldn't be funding, you know, new cities, like that is escapist in some ways. Like we should be funding technologies that's going to actually help the West defend itself against the CCP and all these things. What is the sort of like bull case from, you know, anti-nihilism or, you know, geopolitical perspective of why we actually need companies / cities like Praxis and a few others?
Well, look, you know, there's really one of the probably the most brilliant person that I know on the planet recommended a book to me called Exit, Voice, and Loyalty, which I'd urge people to read. And in the context of being part of a society, you can sort of, you know, try and use your voice to change things. And, you know, one can do that here. Not everyone has an equal ability to amplify their voice and get their voice heard. And so there is this, you know, when voice doesn't work, one has a right to consider alternative options such as exit and trying to do something totally new. And, you know, there are these projects like Praxis where we'll see it's a super long time horizon project. You know, the community they've built is second to none, really impressive group of young folks, interdisciplinary, everyone from philosophers to poets to technologists. It sort of spans a broad range of extremely talented young people. So they're, you know, working to build a new city outside of the United States that would be its own sovereign or semi-sovereign state. Honduras Prospera is another new cities project we founded, working on building a charter city on the island of Roatan off the coast of Honduras. And it is an area where we're going to continue to be looking. You know, it's about there needs to be paths for people to exit. Hopefully, we can fix these wonderful, extraordinary Western societies that are quite broken right now. Hopefully, we can fix them. If we can't, some folks would like some other options to go exit to.
And beyond, you know, when we think about all of these options and issues with the world and so on, how do you think about the balance of what can be solved with technology and startups versus what is effectively general sentiment and politics and just the way the world is going? And I think an investment like Proxy, for example, is somewhere in between on those two. But what's your take on how much technology can really solve here and how critical it is in our future?
I think it's the only thing that can solve it. So I actually think that the future belongs to technologists, to entrepreneurs building breakthrough technologies. I mean, you see it with Elon. You can love or hate him. You can love or hate Jeff B from Amazon. You can love or hate these folks, but the future belongs to the next generation of people like that, and it's sort of the only path to fix things. So I think it is the singular way.
If we're thinking about this drawdown in the markets, and venture investors becoming more and more bearish in all the market sentiment that's happening today, what do you think this means for funding and for fundraising for a lot of the companies that you've backed that are in these more capital intensive sectors? Do you think the reaction there is going to be different than to a lot of other entrepreneurs?
I'd say like less than 15% of the capital we've deployed across all of our funds is in what we classify as capital intensive businesses. So we're not hyper exposed to it. Those businesses typically have a tremendous amount of runway and are going after solving huge problems like defense technology stuff, flock safety, R0. Those are really the only capital intensive businesses in the portfolio. And I think they're going to be just fine. Now, that said, I think, it's not like fundraising is going to stop and no one's going to be investing in these things. It's just going to be, prices are going to come down. It's going to be a lot harder, and you've got to really have the goods. And so, it's like focusing on getting your own house in order as an entrepreneur, focusing on orientation toward durability internally at the expense of like momentum or perception of momentum externally is the right trade to be making right now for the next few quarters.
And then, also speaking of markets, there's been a lot of talks over the last few months about ESG. And just last week, I think we saw the SEC scrutinizing a lot of ESG investments. You did a temp check a couple months ago about how ESG relates to defense companies. I'm curious if you could expand your views on that and how you feel about this whole broader category.
Well, I think I might have actually started the sort of trend on ESG with a temp check that I think I was in January or February, and I'm really excited that lots of leaders picked up on that and have been talking about it, which is great. I mean, it's effectively a way to cancel companies. It's a mentality of looking at a business through sort of a overly simplistic, unforgiving lens, trying to make it conform to sort of a certain predetermined agenda. It's kind of oppositional to truth seeking, which is what we try and do in the world here at Bedrock. And so I think there are these areas of defense technology where it's sort of clearly a gaping hole in ESG. Like, obviously, you can't have an environment, you can't have a society, you can't really have governance unless you have defense, unless you're able to keep your society safe. And so I think I'm innately very worried about any sort of credential, which like an ESG scorecard is a credential, where they sort of have the power to determine whether something's good or not. That's quite dangerous. And I think a lot of the things that we at Bedrock believe are good, such as breakthroughs in defense technology to keep Western civilization safer, the fact that these things aren't part of the ESG framework seems to be quite deeply off.
So just a quick follow-up on what you said. Like you mentioned the credentialism part. I think just last week, you were talking about how credentialism and how it relates to venture investing, and how the asset category sounds a lot about there's a lot of similarities even with management consulting about a decade ago. I was curious if you could talk a little bit more about that and kind of what you see in the market, and if you think that this will continue if we enter kind of a prolonged downturn.
Yeah, I mean, look, whenever you have a huge inflow of capital into an asset class you've had with venture over the last 10 plus years, in order to scale up AUM highly dramatically, you sort of, as a firm, you have to hire lots and lots of people. And so definitionally, your bar is just going to get lowered for the people that you're going to hire if you're trying to manage 20, 30, $40 billion and deploy all of that in 1 year into technology companies. And so it's become, I think, a trap. I think founding companies became a trap. I think becoming an associate or an analyst at an investment firm, investing in private technology, sort of became a trap. And there's sort of been this institutionalization of venture, and I actually think that the change in the market dynamics is going to cut quite strongly against that. And I think that it is very much back to basics. And to me, back to basics is small, tight-knit teams where the people work really closely together. It's not a deal machine. It's not a deal factory. It's not a markup machine. It's not a feeder fund for a crossover fund where you're relying on a crossover fund to mark up your companies. It's not a incubation factory. It is small teams of investors really getting to know small handfuls of entrepreneurs, really understanding what they're building, how it will impact society, why it can be life's work for a large swath of people as it scales, and making fewer high conviction investments. That's what venture was back in the day. I think that's what it's going to be again, and I can't wait.
It seems like the theme of what we're almost going on here is truly back to the basics, right? So yes, on the venture side, I think we as a firm at Village Global 100% agree with your mentality at Bedrock, but I think the same is true from what you described with founders as well. Let's stop with these massive valuations for no reason. Let's stop taking in all this money from these crossover funds, et cetera. And let's just build something people want. And there's a reason for it, et cetera. So I think that theme is on 100% on point. Question for you. Can we extrapolate that out to the country and the world, almost getting back to the basics and getting back to our roots? And if we think about how we solve the financial crisis that we may be entering into or already in, where we solve conflict around the world, all of these disputes going on, how do we fix that? And if we, close our eyes for a second and say, Geoff, you are now president of the United States or whatever country you think has that position of power, what would you be doing to get us back to the basics and to writing all of this?
I can never be president. I was born in Canada, so that's off the table for me.
President of Canada, then.
Prime Minister of Canada.
Prime Minister of Canada.
Definitely not moving back to Canada ever. So, but in any case, look, I'd say yes, this back to basics is actually the right approach. I in your life, societally, it's back to basics. I don't actually think the president of the United States, or the Prime Minister of Canada, can really solve the problems. So I actually do think it's, there's maybe being the mayor if you're the mayor of San Francisco, or if you're the mayor of Atlanta, Georgia, or you're the mayor of, I think you have more of an ability to solve problems. Or if you're on city council, a friend of mine here in Austin, Texas, is running for city council. That, I think on sort of a civic level, you can actually, so if we're talking back to basics, you have to break things down into the smallest units you can. So I think actually these things can get the day-to-day issues, the day-to-day problems. There's much more of an ability to solve these things on a sort of municipal civic level. You can join a school board. You can volunteer at your synagogue or church or mosque or something like. There's all of these ways in which I think all those layers of trying to have impact, there's a way in which you actually have a deeper impact than being the president, because you're actually able to really change lives for people in a much deeper way. You're not going to reach as many people, but you can actually do a lot more.
So just thinking about, just you in your life, given all these challenges that we talked about here today, what keeps you optimistic in the midst of all this?
Well, what keeps me optimistic is we are really blessed at Bedrock in that we're in a position where we get to spend our time investing our capital, our sweat equity in entrepreneurs trying to solve problems, trying to build things that will improve society. And so we are, actually in a very lucky position. We get to actually try in our own small way to do something about this on sort of a day-to-day basis. And so the fact that we have agency over that is what keeps me optimistic for us.
Appreciate the unique insights.
Thank you so much.
If you're an early stage entrepreneur, we'd love to hear from you. Check us out at villageglobal.vc.